is INC Now. Indiana's NewsCenter continues with the Noon Extra on 21 Alive.
And welcome to the Noon Extra. We're taking your calls about the topic of the day. 483-8331 is the number to call. And my guest today is Jeff Sanderson, who is a CPA. Jeff, thank you so much for being here.
You're welcome.
There are a lot of tax issues that are coming up towards the end of the year, the first part of the year, and there's those Bush tax cuts that are set to expire. Lame duck Congress may vote on those again, may not.
Right.
There are mortgage issues, there are income tax issues, lots of things. We have Todd Larson, our certified financial planner, who comes, and a lot of times he says, well, I can't answer that question because you need to talk to a tax professional. Guess what? He's the tax professional. Right. So tell me a little bit about what you think about, I think these Bush tax cuts are a big one.
There's just a lot of a high level of uncertainty what 2011 is going to look like. You've got businesses, taxpayers, tax professionals trying to give advice on something we really don't know the answer to right now.
Exactly.
Will the Bush tax cuts expire? Will they be extended? Will there be a totally different compromise that goes into play in 2011? And
in a nutshell, can you sum up a little bit what that means for the people at home, the Bush tax cuts?
Sure. For individuals, the tax rates currently cap out at 35%.
Okay.
And if the tax cuts expire, that could go as high as 40%, taking into consideration that there's going to be the phase out of itemized deductions again. So you've got businesses, taxpayers making a decision. Should I take some income in 2010 when I know the maximum tax rate that's going to apply is 35%? Or should I defer it, pay the tax a year later, but that tax rate is going to be closer to 40%?
Assuming you make a lot of money.
Assuming you're at those levels. And there's other graduated levels before you get to the 35% that are also going to go up probably on average of 2 to 3%. And that's really where the rub is right now. Are we just going to hit the people at the high level of incomes with the increase, or are we going to cut it off at a certain income level, which what is being proposed is $250,000?
Well, and so many people are living paycheck to paycheck these days that I would imagine any increase in the tax rate is going to hurt a lot of folks out there.
Certainly comes right off the bottom line.
Oh, man. Well, listen, if you would like to ask anything about taxes, any kind of a tax issue, we have the expert here for you. So give us a ring at 483-8331, and we'll take the first caller when we come back.
Indiana's NewsCenter continues with the Noon Extra on 21 Alive.
Welcome back to the Noon Extra. We have a tax professional here today to answer any question that you have about taxes. There are a lot of changes coming up in the tax code. A lot of them we don't even know about yet, but Jeff is here to help explain and help answer any questions that you can toss at him. So we are going to start with Barbara in Fort Wayne. Barbara, good afternoon. What's your question for Jeff today?
Yes, good afternoon. I would like to have a better understanding of the amount that you can deduct for charitable contributions. I normally do my own taxes, and I do itemized, and in the 1040 booklet it says 30% is the max, but I've been told that for like churches and things like that, it can be up to 50% of your adjusted gross income.
Okay.
Yeah.
What do you think, Jeff?
Yeah, you're correct, Barbara. And first of all, like you mentioned, to be able to deduct your charitable donations, you first do have to itemize your deductions. And then beyond that, you can deduct the charitable donation up to 50% of your adjusted gross income if it's basically considered a public charity, which would be your churches, schools, generally your 501c3 organizations. Now, there is a separate limitation of 30% if your gift is going to what is called a private foundation, or if you're gifting appreciated property, such as you've got stock in a publicly traded company that may be worth $100 a share, but you only paid $20 a share for it. You can get a deduction at the $100 per share, but that's when the 30% of your adjusted gross income limitation comes into play.
Barbara, did you understand that?
Well, yeah, I did.
Okay.
I have one more question.
Go for it.
Do I have to get a special form then if I'm going to go over 30% to my church? And they're having a special building program, and that's why I'm exceeding this year.
Okay.
No, and again, with your church, it's 50% of your adjusted gross income, so you're looking at the 50% limitation. All you really need to do to get from your church is a receipt and basically documentation that you made the gift. If the gift does exceed 50% of your adjusted gross income, that